How do you do, ladies and gentlemen? I'm your host, Seth Julian, welcoming you to this week's briefing. Well, we're going to talk about specifically the dollar ruble, but in general, we're going to talk about all sorts of things, from the fundamental to the technical, because what we're going to talk about is the pending, possible, threatening invasion or partial absorption by Russia of parts or all, in the worst case scenario, of the Ukraine. This situation has been brewing, for centuries. It depends on how you measure it, how far you want to go back. But as far as the most recent period of time is concerned, go back to 2012, 2014, when the Russian Federation retook the Crimean Peninsula, where the Black Sea Fleet is based. Formerly was a part of the Ukraine, then which became an independent country after the fall of the Berlin Wall in '91, and the Russians have been hassling and threatening and actually punishing the Ukrainians, because most of the gas that flows from Russia to Europe went through, or still does go through, pending the opening of the Nord Stream 2 pipeline, which is not a candidate for opening anytime soon, given current geopolitics. They've been squeezing the Ukrainians, because the Ukrainians clip part of the price that the Russians get from the Europeans for Russian gas into their own pockets by virtue of having the pipeline run through their territory. Now, Putin's ostensible plan, there are just a little more background, I think, before we go any further. There's 100,000 Russian troops amassed on the Donetsk border, the Donetsk-Russian border, and they've been fomenting trouble in eastern Ukraine now for years. Put in puppet regimes, sort of defeated European-leaning, NATO-leaning candidates in elections, and pretty much have subverted any sort of normal definition of democracy in the Ukraine. And it's potentially very dangerous. It could be a shooting war in Europe, the first time since the Serbian War, the Yugoslavian disintegration. And we hope it won't come to that. Diplomacy is already in gear. There's talks. I don't remember where, and better left unfollowed and unstood. Probably Vienna, if I'm not mistaken, but I could be. The U.S. president has threatened. We're talking the fundamental realm here. We'll get to the technicals. The technicals, by the way, bear out what I'm spelling out in the fundamentals in a moment. We'll get to this chart, exactly what we're looking at here, too. But just so you can look at this while we're talking our way through this. The candlesticks of the dollar-ruble rate. This is a 4-day chart. So the data set goes back to mid-2018 and goes out till today. Volume, the force index, the three exponential moving averages. The black line is the WTI crude price. The yellow line is the U.S. dollar index. So just you can ponder those things as we're walking through the fundamentals, then we'll come into the technicals on the chart. The U.S. president, as of last week, made it quite clear that the sanctions would be significant and painful for the Russians were they to make a move. Remember, U.S. power as the sole superpower, as the world's policeman, rests way more in with the bankers than it does with the soldiers. Yes, America has tremendous military force, but she's very reluctant to ever have to put it at risk. But what she does use with abandon is her financial muscle. And they've threatened already. Biden has threatened to remove the Russian Federation and its 1 million tentacles and satellites from the SWIFT system, the International Bank Money Transfer System. look, Putin has proposed, and you know, also U.S. Foreign Secretary, or what they call Secretary of State, Blinken, has made it clear that he's not expecting too many breakthroughs with these people, because the Russians came to the table with really, truly outrageous demands, saying who and who could not be included in NATO if it were to expand, making it patently clear that the Finns could not and would not be allowed to join NATO if they so desired. All sorts of things that, you know, are just non-starters, and yet could in theory be negotiating points, but it's not clear. It's just not clear. Not clear where it's going to go, where the long way to go in this process. And it costs millions, tens and tens of millions of dollars to keep that many troops in the freezing field, day in and day out, week in and week out. You got to feed them, you got to clothe them, you got to treat them medically, you've got to maintain their equipment, you've got to maintain their readiness. It's way bigger than an exercise. Way bigger than this. This is serious business and has to be treated as such. And the NATO alliance, led by the U.S., of course, led by President Biden, is making it clear that there will be costs. Although by making it clear that there will be costs, he's apparently, at least to my mind, making it clear there's not likely to be any military costs. The costs are likely to be financial and economic. So that, you know, just adds a little bit of mystery and romance to this story of potential blood and woe. But such is our lot as traders. We don't get to choose what the world serves up. We only get to choose how we react to it. And if we start looking at the reactions, what we think here at the House are the likely reactions, now we're going to take a look at the technical side and see what we're looking at. We can see, first of all, the most fundamental is the price movement of the last for, what is this, November 1st, so December, January. It's just 2 months, 2 months of data. We see that it's made a quite a weakening. The ruble has weakened by probably around 8% here at this point. Yeah, 8.4% since November, 2 months. So this decline is a decline of 8.4%. So that in itself is significant. And while there has been a decline in volume, it's still fairly high. It's higher than average, not by much, but it's still way higher than average at this point. So if you consider average was somewhere around here, it's still, you know, a good 10, 12% above average. The force index, again, which is a combination of volume and price direction and rate of change, it's also highly indicative of the upward direction. So the volumes are good, the movement is high. So that in itself, our basic indicator is holding true. It's also, as you can see, it's just broken above the 20 and the 54-day exponential moving average, and that's a good sign for continued continuation. And it's been above the 200-day for 2 months already. But the point, there are a couple of points I want to bring here on the technical side. First, just let me show you that on the technical side, well, here, this is just performance over the last week, 1 month, 3 months, 6 months, and year to date. Just, you know, in the last, here we saw, this is the 3 months that were included in the last two in the chart. That's the highest single period, the last quarter. It's up by almost 5%. It's weakened by 5%. And just to review this, for those of you who may forget, I realize this is running longer than usual, but this is an important subject because it has huge implications for the price of oil, for the price of the dollar, and certainly for the price of the ruble. And so it's important to keep our heads around this, because this is a story that's going to, it already has legs, and it's not going to go away fast, and has the potential to be very, very dangerous. So we need to understand it, get our heads around it as soon as we can, to position ourselves on how to trade or rig for this, or just stay clear of it. At least you'll know what to stay clear of. So the other thing I want to note is that oftentimes you read, and for short spans of time, it seems apparent that as oil strengthens, the price, the strength of the ruble grows. In other words, you would assume, and there are examples, as the price of oil, the black line goes up, meaning the price goes up, the dollar ruble falls. And that does happen. There are examples of that, but there are also examples where the price of oil falls and the ruble doesn't fall that much, and then it continues to go up and the dollar ruble continues to fall. So it's not a 100% correlation by any stretch of the imagination. In this simple data set that we're looking at, which, as I say, goes back to about the beginning, the middle of 2019, it seems to happen, 3 out of 4 times, 4 out of 5 times, no more. So somewhere between 75 and 80% of the time, it seems to hold, but not all the time. But what does seem to be correlated at a much higher degree is that as the dollar weakens, the ruble strengthens. And that is a correlation that seems to be that seems to hold with a much higher reliability than the oil ruble strength weakness conjecture. As the dollar strengthens, ruble weakens. Yes, well, it's hard to say. I have to stretch it out. It's not such an ironclad rule either, because we had the pandemic. This, of course, is the pandemic. So the dollar weakens and the ruble strengthens. That holds true for sure. Dollar strengthens, ruble stays steady, really. It doesn't. Dollar stays steady, ruble gets a little more sporadic, but stays in a fairly narrow band. Dollar really gets strong, ruble gets weak. So this is definitely 5 out of 6 times. That's 80% of the time. It's fairly, so therefore, what I'm trying to say, I hope I'm being clear. I realize I'm running longer than usual. But as the dollar strengthens, the ruble is likely to weaken further. And the dollar is definitely likely to strengthen. The Goldman Sachs today predicted that it was likely, in their opinion, that there would be 3 rate hikes, not quantitative easing reductions or tapers, but rather actual increases to the nominal interest rate charged to banks by the central bank, and therefore would ultimately penetrates through to our own personal debt and corporate debt. Those rates are likely to start moving up. They're not on their way to historic averages, but quite far from the 5.25%, which is the long-term historic interest rate in the OECD. So we're not there yet, but we're starting to get on that path. So it's therefore likely that the U.S. dollar will strengthen, all things being equal, which they never are. But assuming this does not break out into open warfare, in which case we'll have to rethink a lot of this. But in the case that it does break out in open warfare, let's talk about what those possibilities might look like. Oil is very likely to go up steeply. The Russians supply a great deal more gas than they do oil, but not an inconsiderable amount of oil as well to the world marketplace, mostly to China and Japan. And the ruble itself is likely to weaken significantly. Now, its high in this data set goes to 82, and now it's only 74, 75 even, but that's still a fairly large movement. There's a lot of price room to move here, and it will. If this, heaven forbid, breaks out into something terrible, it's going to have effects on certainly dollar, ruble, oil, cryptocurrency. I do consciously leave out gold. I don't think gold is going to be as affected as perhaps some of the cryptos might be. But certainly oil, and certainly the ruble, very possibly the euro, very possibly the pound, very likely the Saudi Arabian real, etc. But we'll talk more about that at length. So, ladies and gentlemen, this is really going much longer than I usually do, but this is a big subject, and it's important to know the background. The war drums are beating on the eastern coast of the Ukraine, on the eastern border of the Ukraine with Russia. Putin is in a mood to aggravate the West and taunt NATO and to pretend to dictate terms to NATO, which NATO is not going to like. It's not clear how Putin's going to react, and nor is it clear, for that matter, how the Ukrainian nation and the Ukrainian people are going to act, or the Ukrainian army are going to act. These are all jokers in the deck at the moment. We don't know. So there's a great deal of uncertainty. There's a fairly great deal of interest in this volume-wise, and there's a great deal at stake. This would be the first time since Yugoslavian disintegration in the early 1990s that bloodshed and warfare would come back to Europe. So stay tuned. Keep your eyes focused on this sharply. It's an important matter, and we wish you all, ladies and gentlemen, the ability to trade with confidence. Bye-bye for now.